Target is out with better than expected earnings as consumers shopped, and shopped some more during the holidays. The company is warning on margins for the first quarter. Talk with Target CFO Michael Fiddelke about the quarter and the road ahead.
So when you look at the quarter, our 9% growth, the headline I'd leave you with is that it was driven by traffic. Almost all of that growth came from traffic. And so that means consumers with their feet and their clicks picking Target more often. And so that's an incredibly healthy sign for our business. If you step back and look over the last 2 years, we've now crossed the $100 billion threshold as a retailer, grown by over 35%, $27 billion over 2 years. And so we see a lot of strength in the business, and that gives us confidence as we look ahead to grow next year too.
As a CFO of Target, does inflation keep you up at night?
We certainly are watching the inflationary cost environment closely. But I'll tell you, Brian, where we tackle that challenge is through the lens of our guest, and we're focused on protecting value. We have a lot of levers we can pull in our business to combat inflation, and price is the lever we pull last, not first. So making sure our guests find incredible value at Target is our focus day in and day out. You can see the evidence of that in costs going up faster than retails at Target, and it's working. That traffic growth that we saw in Q4 is a testament to guests finding Target, more and more engagement over time.
Right. Out of the many other things you should be worried about is inflation. There's also life, et cetera, et cetera. But yes, first quarter, you mentioned that operating margins will be well below last year. What's driving that?
Yeah, there's some unique things in last year's results that I think is going to make profit choppy quarter by quarter. But if you step out from the quarter to quarter volatility, the thing that I'm encouraged by is the growth we expect on the year. We expect to grow the top line. We expect to grow the bottom line. And the thing powering that growth is our investments. We'll remodel more stores. We'll open more new stores. We'll invest in some of those fulfillment services that guests have come to love. Drive Up is a perfect example of that, where we launched that service several years ago. We've made it better over time, adding fresh and frozen products that we didn't have in the assortment to start with. And as we listen to our guests, they've said, gosh, it'd be great to get a Starbucks as I complete that Drive Up order. And so that's something we'll be testing this year too.
Does it also reflect, though, the outlook, a cautious consumer spending environment? Listen, Target does not have stores in Russia and Ukraine. Supply chain is not exposed there. I get it. But we've seen a big rise in gas prices in this country the past week, the past month. What's your view on the consumer?
Yeah, so there's probably not one single view on the consumer. We see a consumer that's wrestling with the current global challenges. We see a consumer that's focused on this last phase of the pandemic that we're in, but also seeking a return to normalcy. We see a consumer that's feeling the impacts of inflation, but also has a pretty strong personal balance sheet. We see a consumer that's focused on price and value, but also willing to splurge in important events like Valentine's Day that was just really strong for us. And so, we found success by really listening to the consumer and making sure that we're finding ways within our multi-category model and within the ways we make it easy for guests to shop to put forward an offering that has guests continuing to choose Target, and they have.
There's a lot of sticker shock out there, Michael. I talked to a lot of the consumer products CEOs. They're out there raising prices. This morning, I came across gas prices in California are hovering around $5 a gallon. Do you think U.S. shoppers are likely to trade down this spring?
Yeah, we're monitoring the consumer really closely as we go into next year. And it's tough for me to predict exactly what consumer trends will play out for the year or what might be at the top of the guest shopping list. We know it'll be a consumer that's focused on value, and that's why protecting value is so important to us. We also know we've got a really durable model because we have strength in so many categories. It's easy for us to stay relevant no matter what's at the top of that guest shopping list. So in my house, it might be a kid who's outgrown their clothes that drives a trip to the apparel floor pad for that trip, or it might be restocking the pantry with a heavy food and beverage order. And so there's so many ways for us to stay relevant. That served us really well over the last couple of years, and I would expect it to next year as well.
As you know, I'm a frequent Target shopper, and I've seen, and it's not just dedicated to you guys, but empty shelves. I guess it's a high-class problem to have that, of course, in part reflects supply chain challenges. How far are you along to addressing this?
Yeah, over the last couple of years, we've been making progress quarter by quarter. We're never happy when the guest finds an empty shelf, but I feel like we've made good progress as the pandemic has played out over the last couple of years, and we're working really closely with some of our vendor partners to shore up any places where we've got work to do. I will say, stepping back, I feel really good about our inventory position as we head into 2022. Our inventories are up about 30% to last year. And so the teams have done a wonderful job navigating what's no doubt a complex supply chain to have us in a strong inventory position as we step into the year.
As part of fulfilling and getting those products on the shelves are the workers themselves. Now, Target has come out here saying they're lifting their wages where you have led in the past, but still $15 to $24, depending on location and job. How hard is it to attract talent in this market here?
So I'll tell you, Brian, those investments in team are the best investments we make. And they aren't a just here and now investment. We've been on a journey for years to invest in the team, laying out a path to get to a $15 starting wage, which we did a couple of years ago, adding investments in wage to the increases that we talked about just yesterday, expanding benefits offerings, adding tuition-free education support. All of that is an investment in the team to deliver that exceptional experience that's driving growth. And right now, that's serving us well. We track things like the metrics around our ability to attract and retain a great team. And those metrics look for us stronger today than they did pre-pandemic. And so that investment's paying off, and the team is paying off that investment with their support of the growth we've seen.
You're in New York City for your first investor day as CFO of Target, I believe. Now, you put out a longer term outlook. And one thing that caught my attention is Target looking to spend $4 billion to $5 billion on CapEx. I believe you spent $3.5 billion in 2021. If an analyst came to you and asked you, Michael, where are you spending that additional money over the next few years? Where are you spending it?
Well, the headline for all of it is it's about growth. I'm excited for some of the projects we have in store for next year and beyond. And it starts with our stores. So investing in remodels. We've laid out a plan to remodel the chain. We're only about halfway through that journey. So there's a lot of targets waiting for us to put our latest and greatest thinking in your local store. And we know the guest response when we do that is strong. I'm excited about the new stores that we'll continue to build, find markets that don't have a Target today and be able to add one. We'll continue investing in our fulfillment capabilities. Again, Drive Up is a service we've seen guests flock to over the last couple of years, and we're excited to make that service even better by testing Starbucks and returns.
So hundreds of remodels over the next 3 years, and how many stores will you open this year?
Yeah, we'll accomplish more than 200 remodels in the year to come. We expect to open in the neighborhood of 30 stores next year, but that's a multi-year journey to make sure we're refreshing our stores with our latest and greatest thinking and to find those markets that could benefit from a Target that doesn't have one today.